Today, we're diving into an investment case that's built on something you don't see every day, a government action that's about to create a brand new, legally required market. We are talking about RentGuarantor, a company that looks like it's in the perfect position to solve a massive looming problem for millions of landlords across the UK. So get this, a single piece of legislation is about to come into force that will completely flip the script for landlords and tenants. And we're not talking about a small tweak here. This is the kind of shift that creates an entirely new market need, basically overnight. And here's the catalyst right here. The Renters' Rights Act. Starting in May 2026, it makes it illegal for landlords to ask for big chunks of rent up front. Now, for decades, that was the main way landlords protected themselves from risk. That security blanket, by law, it's being yanked away, leaving a huge problem that is screaming for a solution. All right, so here's our game plan for this explainer. We're going to look at why the market's at a tipping point, what the rent guarantor solution is, what's driving their growth, their road to actually making a profit, the risks involved, and finally, the big picture investment outlook. First things first, let's really unpack the massive headache this new law is about to cause. We are literally watching the end of an era for how landlords secure their properties. This brings up a huge question for the UK's 2.3 million private landlords. What now? How are they supposed to secure their income? Especially from really good tenants, think students, self-employed people, or folks from overseas, who just don't have a family member who can act as a traditional guarantor. This one legislative change has created a massive gaping hole in the market. Which, of course, brings us to the company that was practically built to fill this exact gap, RentGuarantor. Their whole business is designed to offer a professional, reliable guarantee service to solve this very specific, legally created problem. So how do they make money? It's pretty straightforward. For every tenant they approve, they get a one-off fee. In the third quarter of 2025, that fee averaged about £766. Think of it as being roughly 3 to 5 weeks worth of rent. And in exchange, the landlord gets a solid guarantee for the entire lease. And here's the thing, demand is already on fire, and this is before the new law has even kicked in. Almost 1,000 contracts in a single quarter. That's an 83% jump from the year before. It just goes to show you there's already a huge organic need for this service that the new law is only going to pour gasoline on. The whole process is really slick and efficient. A tenant hops online to apply, RentGuarantor runs a pretty sophisticated risk check on them, and if they're approved, the contract gets signed. The tenant pays that one-time fee and boom, the guarantee goes straight to the landlord. It's a clean, scalable, tech-first model. So, the model makes sense on paper, but is it actually working out in the real world? Let's switch gears and look at the hard data, the numbers that are really fueling this company's growth. And yeah, the numbers show some serious momentum. Revenue in Q3 2025 shot up by over 92% compared to the year before. And what's really important here is that it's not just about signing up more people. The average amount they make per contract is also ticking up, which suggests they have some pricing power and are getting more efficient. And analysts think this is just the beginning. The forecasts show revenue more than doubling between fiscal year 24 and fiscal year 2026 to an estimated £3.4 million. Now that is the kind of steep growth curve that really makes investors sit up and pay attention. And what's driving that revenue? Well, it's a projected explosion in new customers. The number of tenant contracts is expected to grow at a compound rate of 64% a year for the next 2 years. This is a direct reflection of the company's scaling up to meet that massive market need we were just talking about. But what about the competition? Well, their main rival, a company called Housing Hand, has a policy of not serving tenants who receive universal credit. RentGuarantor, on the other hand, does. This is a huge deal. It gives them exclusive access to a large, stable part of the rental market that's often overlooked, creating a really powerful competitive advantage. Of course, sales growth is fantastic, but that's only one part of the story. The million-dollar question for any investor is always, when does the company actually become profitable? Well, the analyst forecasts here paint a very clear picture. You can see the losses are expected to get cut almost in half in fiscal year 25. And then in fiscal year 26, they're projected to hit their first ever adjusted operating profit. For investors, that is a massive, crucial turning point for the business. Now, let's talk about the elephant in the room for any guarantee business. The big risk is obvious. What happens if the tenant defaults and doesn't pay their rent? So let's see how RentGuarantor protects itself. They've got this really smart 3-layered defense system. The first line of defense is just being incredibly picky. They have a super strict vetting process, and only about 1 in 4 applicants actually get accepted. The second layer is active management. They have an in-house team that jumps in early to sort out any payment issues. And the final backstop, the ultimate safety net, is insurance. The majority of their potential payout risk is covered by third-party insurers, which really protects the company's finances.
Okay, so let's pull all of this together now and take a look at the final investment outlook based on a deep dive from market analysts.
You can tell the leadership team is laser-focused on getting this right. The CEO, Paul Foy, said that their recent listing on London's AIM stock market was a huge milestone. It wasn't just for show. It gave them the capital and the profile they need to get ready for this next huge wave of growth. And that potential is being quantified by the pros. For instance, Allenby Capital started their coverage with a fair value estimate of 42 pence a share. When you compare that to a recent market price of around 27.5 pence, that suggests a potential upside of over 50%. So let's just boil it all down. The whole investment case here really sits on 3 powerful pillars. You've got a fast-growing company with a proven business model, a huge and growing market, and this incredible government-created tailwind that's about to turbocharge demand. It's a truly compelling mix of factors. The real question for investors is this: as the old way of doing business is literally outlawed, is RentGuarantor perfectly positioned to become the new standard, the essential key for landlords and tenants trying to make their way in this brand new world?